Hey everyone, this is DayTraderRockStar, and this is the high probability watch list for the week of May 5th. Happy Cinco de Mayo. And we start off the week here just looking at the performance of this past week. And you know, I've been starting a new segment called Market Radar, which we kind of look at and predict the following day's market activity, or the S&P, how the S&P is going to perform. And going into today and kind of ending the week, we knew that we had some big news items this week. And we're looking at those news items to be catalysts to take us to new highs. Well, we didn't get to new highs. We did get higher, though. We continue to move higher. The market looks very healthy and actually looks quite strong. And being a Friday and we got the jobs report out, when the jobs report was very good. And what happened was the market initially got that initial spike, pre-market spike. And again, the jobs report came out at 8:30, so we had a pre-market spike, and then the market sold off. It came back in, and this is, you can actually see, we came back in pre-market, opened up, stutter stepped around a bit, and then we rallied. And we took out the pre-market highs, and we kind of made new highs. We took out yesterday's highs, and which would be Thursday's highs, and we actually set ourselves up for a perfect example of selling into that strength. So all of a sudden we had some serious selling coming in, and I can show you that on a different chart. And this is how we played out throughout the day. So, you know, looking at the daily chart, you're not seeing a couple of things that you want to point out. The daily 60-minute, the daily stochastic last oversold level was key. All right, in a very bullish market, a bullish trending market, you're going to get better buy signals than sell signals, because you could get embedded up here, and you have to really take into consideration other factors that are on the chart. You just can't go by this one indication. It's a great indication. It's my favorite way to time the market, but you also want to have other indicators lining up to confirm these areas. So right now we got an overbought level. We have a market which has been rallying each time we got oversold, and the patterns are playing out textbook. And we recently had a beautiful candle here, and we called for more upside, and we actually look for this market to take out the highs. And we continue to do that. Today we actually took out, the recent consolidation high. We didn't get up to the all-time highs yet. It's right out of reach, but we ran out of time. It's Friday. We are overbought on the daily, and that's the main concern going into next week. But it's the 60-minute time frame, which has been really the go-to short-term indicator, has been really great. Even the last one here, which a lot of people were getting a little nervous. We got oversold, and the next thing you know, we bounced back up. And look at this, how fast we rotate. Yet the price hasn't come back down. So it's actually a very bullish setup. And I think it was just a matter of kind of a Friday trade. The jobs report was out. It was just kind of a weird day, And next week, I could see us continuing to push higher. The timing, represented by the 60-minute chart, I'd like to get us back into an oversold level and just kind of rotate back up. Does that take a day? Does that take Monday to get a little more further downside? And then we have that turnaround Tuesday, which has been a very good trade throughout the year and even part of last year. Tuesdays have been one of the best performing days. So we're going to look for that. I'm going to look for that, maybe a possible little further downside on Monday, but then maybe a Monday afternoon or Tuesday return to glory and maybe a pushback up towards the highs. And we'll try to get to those highs again next week. All right, so the 60 is definitely going to be in play. We just have to see how that's going to set up. And then, of course, the daily is already extended. So, and I got to put out there, if any news comes out, especially European, Ukraine, Russian news, which seems to be getting a little heated now, that will definitely, kind of trump all the technicals and could move this market against its against the grain. So where does that leave us? 60-minute great setup, daily extended. Still think the highs are going to be taken out. But going into next week, let's take a look at, because of these things, and actually just take a look at today's action, because there was some great action, and a lot of the signals today from the tradeometer were key on. So even though the market has been kind of just grindage here, and everyone's a little nervous, are we going to get to the highs or not? The market has been giving us great signals, and they're able to be traded off of. Now, the daily setups are getting extended, right? Your daily time frames are getting extended, but your 60-minute time frames are getting oversold. So that's typically a very bullish scenario, but the trend has been so strong. We're very close to highs. We're going to concentrate more on that 60-minute time frame going forward. And before we even talk about that, let's just take a fast look at today's action. You can see that the market kind of pulled back a little, but not for long. I didn't expect it to pull back for long. We make some comments in the room talking about watch this market now, and we rip higher. And we ripped higher. We got our first oversold level coming in here. It was whatever it was, around 10:15, 10:18. Sorry for that. There we go. And pulled back off of that. We bounced back up. We got another nice tradeometer overbought level. And from that point on, we just dove. The market here actually dropped off. We were wondering if there was some news out there. It was just a technical sell-off. There was some... anyway, what happened was there was some volume. We came right down. There was actually an underlying trend line here from these two pivot areas. A 9 o'clock pivot and a 9:30 pivot. It kind of stretched out here. And we just happened to go, just happened to mark that out for you because we were waiting for an oversold level. We got very close to being oversold. It didn't trigger 100%. And the market started to grind back up. And we grinded back up until about 12, whatever time this was here, 12:48, I think it was around 12:48. And we got the overbought level come into play. And we had a nice overbought level on the stochastic, on the tradeometer. And from that point on, we did sell off. We got an oversold level here, and you can see we kind of failed that one. That one actually bounced back up to the pivot. We stayed under that 20-period moving average. We kind of came down to this underlying support line and chopped around and bounced, and then followed through to the downside. And at this point, I decided to jump on the mic because I was watching some of the comments in the room talking about the failed signal here, and I was, wanted to make a point of saying that this is just one indication out of 5. We pay attention to 5 important indicators when we trade, the intraday markets: stochastics, trend lines, recognizable patterns, which is 3 major patterns we're looking for. Channel lines, the support and resistance, and the moving averages. And we're looking at the volume profile lines, which are the orange lines. And I did an educational segment on the tradeometer and how to use it just a couple weeks ago, and it's posted on the site. But the main thing is it's one of those important 5 indicators. It's you use it as one of the, and you want it to line up with another one. This is it works great when it lines up with the volume profile lines. It works perfect when you line up with the a trend line or a channel line. And it also works great when you come down to a pivot area or support and resistance technical level. So you want this indication to happen at one of these levels, like the 200-period moving average, the volume profile line, underlying trend line. Here's a pivot line. If one happens here in the middle of that move, it's just one indication out of 5. You need to have at least 2, preferably 3 to be an HPS setup. All right. And even though these are great timing indications, and you could trade them on your own, the ones I like to take, personally, are the ones that converge. There's a confluence between 2 or more indicators. So at this point during the day, probably around 2 o'clock, I started seeing this pull back, and we were discussing in the room, and I said, let me get on the mic, or let me get on the camera and take this trade live. So I kind of walked everyone through a trade I was taking. And, we took that trade based off the tradeometer, based off the underlying trend line, which was really established by these 3 pivot areas. And there was a nice little, support pivot here. It's called support 1 pivot, which is calculated to the previous day's highs, lows, and close. And these are automatically generated. So these I don't even worry about. This I generate myself. I'm able to identify some good channels and trends. And then from that point on, we know our entry. We take the trade. And then we try to manage the trade. And, there's different ways of taking trades off. I had just a set goal. I was trying to get, at least up to 1875. I figured that 50-period moving average was going to be a good level, and I sold into that. And it continued to move up. It was like one of the best setups. And we pushed right up against the pivot area, and what happened was we got an overbought level. And from that point on, we sold off, and it was another perfect setup. And then the market ended up closing, and I'm doing this video tonight. But this shows us how well this works, and I want to really focus on this a lot more next week. And the time frame is going to be a little shorter next week. And one of the reasons why is because, I tell you, I looked over probably 700 to 800 stocks today, scans, dailies, 60s, and I'm seeing a lot of, what I'm seeing here, and let's just give you just a, no, not that, what is that one? I'm looking at Merck here. We're seeing, daily setups that are extended, right? Very strong stocks. Love to be in a great name like Merck. But very hard to, when I said these are the great HPS setups, when you have that recognizable pattern, a daily oversold, it's a great swing trade. It's hard to justify an entry long here because we're actually overbought and we actually have a nice little pullback. But we also know in a bullish trend like this that we will get the crossovers here, but it will continue to climb. But what happens is you'll get the opportunities on the 60-minute time frame. So the 60-minute time frame is getting oversold now, and you can see the last time it got oversold, it big bounce up here, and the last time it didn't do much. But the majority of the time, when you get oversold on the 60, you're getting that move higher. And this looks like a classic flag that's happening right now. So we're in a kind of a here's a nice little flag here, and you have an area up here. We haven't really established an area here yet, so we don't. This is not established, but just pretend this is going to be a flag. So you're going to look at something like this. With that 60-minute setup, it makes sense that this is going to rotate back up, probably run out of steam, consolidate a little bit more. But the area right here is great for probably a scalp right now. We're holding at 50. We got oversold. It's at 58.22. So you see what we're doing here. We're looking at shorter time frame trades. The daily here, it's hard to justify getting in on a stock on a daily because of this level. But if you look at it closer, that 60-minute time frame is probably giving you a possibility for a scalp or something. And it's, who knows where you're going to get out, 50 cents off of this. But these are the type of setups that are setting up. So we're going to have to concentrate on this going into next week. I'd rather bring you the great swing trades. But we're getting that, we're at a point in the market right now that we are seeing a lot of those setups being extended on the daily, but rotated on the 60. So we have to kind of sort through those, get the best of the best setups, and trade them on a shorter time frame. Almost a type of a scalp or what we're looking at is great setups, and looking at that key. Which one has the most indications of a continued move, and try to get either the scalp, the intraday scalp, or at least just an overnight hold just to get a bigger move. But those 60-minute time frames are perfect for that because usually, it takes about 2 days to rotate from overbought to oversold and oversold to overbought. So once you start to get here, you're looking at a possible, at least a day trade, trying to get in at a good level, trying to just let it work its way, not getting too involved with the chop, but eventually knowing that the rotation here should bring us higher. And then measuring out maybe some profit areas based on the time frames, or at least on some patterns that will start to form. But the good, that's what we're looking to deal with, And I went into this week, into this Friday here, I was psyched to come in. I said, I want to put out the best watch list ever. Well, I can't put out anything that's not there. There are some great channels, but we're going to give you the greatest things on the 60-minute time frame this time. All right, the dailies are going to come. They need to rotate. They need to ripen. It's just like a fruit. You can't pick it yet. It's not ripe. Whatever analogy you need to use, it's not the right time. They'll show up, and when they do show up, we're all over them. But right now, the 60 minutes are starting. I'm not going to give you anything that I don't think is, is risky. So, let me actually, before I show you that list of great stocks, I want to start to show you some channels. These are just great channels that are set up in the market. I always like to give you something like this. These could be considered trades. If you want to focus on, I'll make a comment on each of them. Agilent was a trade over here. This was the last HPS setup. We kind of came right back down to it, popped it. Nice channel, holding the 200 period moving average. Almost looks like it's trying to break through this a long organized coil, but it's not really coiled up. It's almost breaking out before it. That's I'd love to buy it down here in a coil off of the lower trend line. It's not there. That's why I'm probably not in it, but it does look very bullish here. All right, so it's a great example of a channel here. Disney, great stock, great entry, great exit. Still love this setup. Still a great setup, and I expect this one to make new highs. I think this is one of the strongest areas of the stock. When the stochastics are really spread, well, the K and the D line here kind of really spread out, and the momentum here is really picked up really good. And it's not 100% into that overbought yet. So it's usually we have a little bit more upside. The trend line right here would definitely be my first target on this if you're still in this. If you're still in this, 81 seems an easy target. 81.50 is a good possibility. So you're talking about another dollar to the upside just to get up to that level. And because Disney is what Disney is, I would expect it to eventually break new highs and continue to move higher. So, Disney, definitely a great tradable stock. Right now, it's only telling you that it's going up. Great channel, great trade. Corning, look at this. This is a stock that gives me a problem because it's it's just over $20. Do we follow out and fill out this channel? It looks very bullish. I have a feeling we're actually going to break out of this channel. We hold in that 50-period moving average. This is starting to turn into one of these growth companies, it looks like. It's just starting to grind up. So, if we're talking about a stock under $20, it's one of my best bets. There's two of them. Corning, GLW, or Sony, SNE. Sony on this recent pullback probably was the cheapest you're ever going to get it again. All right, period. I don't think we're going to get much of a pullback from this candle. We gapped up today. We're crossed over. The daily looks good. I haven't even looked at the weekly. Weekly is kind of negative. I would say so. I haven't looked at the dailies, the weeklies in a while, but the daily looks good here. In either case, we're looking at. Just wanted to show you that Corning flag. Nothing else other about it. It's your decision to make. Hershey's. We're seeing a slight uptick here. It was interesting. We got a smackdown here. I think it was earnings or something. The momentum here is slowly shifting, though. And we're starting to push back up into this channel. Not that interested in it, to tell you the truth. CCL, very interested in it. The problem is, we're right up against where we're running into a lot of stocks like this. We're in channels. We're right up the top of the channel. What do you do at this point? Do you short into this area? Well, looks like a good short 3 days ago. But these things have at this point, this is more of a bullish pattern. And the longer the pattern plays out, the better the chance, there's going to be a good chance that we actually eventually break back up. And to time that, we're going to look at that divergence happen on that 60. And you can see, we're starting to, here we're getting oversold, lower low, lower low. Now we're overbought, higher low, trying to fight it, push back up. There's a larger trend line above us. It feels like we're going to go higher on this. Looks like a big flag overall. The daily, this is the situation we're running into, though. All the dailies are overbought. All the 60s are oversold. So you have to surround yourself with something really good quality, or you're going to take that short setup. And the short setup in this market has not been the best setup. So I'm hesitant on saying it's all clear. But if you wanted short setups, tell you, there was one of the best ones that I've ever seen. I could not believe we had two coils. A bearish coil stochastic channel breakdown. All right, classic right there. The exact same setup. Announced it here. Case closed on that. Case closed. Duke. That one today. Same thing. You can see it. Channel coiled up, crossing over, rolling over. I know Frank was getting in these left and right. Some people were getting into them. They're all profiting from this now. So, looking good. Con Edison, ED, starting to break back down. So there could be some rotation in these. That was the shorts. All right. ISRG, right on the lower support line. I want to believe in this stock. Doesn't seem like it wants to go anywhere yet. So just watching it. And again, another example of a great, seems to be a great setup here. Altria, MO. You can see the daily is extended up here. We're almost coiled up on the daily. All right, so this is a scenario. I'm just pointing this out again. Normally I would look at this and say, wow, we're kind of coiled up. We're extended. Then I looked at it today. I said, let me look at it. And I look at the 60 and I was like, we're kind of holding sideways. We're pulling back. This is actually looking quite bullish. So we're getting to, again, the situation where we're getting the 60-minute time frame oversold. Here's Philip Morris. Looks like a perfect setup. And the daily overbought. So this is just from one candle. Just one candle pullbacks, or pulling those 60s all the way back. Overall, looks good to the upside. So I put a trend line up here, and I would guess that will be our next level to get to on this. On Philip Morris. There is actually a good gap up here. Just take a look at the 87 level as an area of resistance. All right, so let's start this week's watch list off here.